So the first one we want to talk about is the earned income tax credit. The first big change that's occurred with the earned income tax credit is that historically, you cannot collect the earned income tax credit if you have a certain dollar amount of investment income. Last year, that amount was $3,650. And this amount gets increased every year because it's indexed and it'll go up based on changes to the consumer price index. Starting in 2021, this investment income limitation has been increased to $10,000. And this is a permanent change to the earned income tax credit. And starting in future years, starting in 2022, that $10,000 amount will be adjusted upwards based on changes in the consumer price index. This is going to be a big change for some taxpayers that previously were unable to collect earned income tax credit because maybe they had something like a capital gain that exceeded the $3,650 amount, or they could have had rental income, or maybe they had some income coming from an S corp, and those were the items that kept them from getting the earned income tax credit. So now the amount is much larger, $10,000. So this should open up the credit to some taxpayers that previously didn't get it. The next thing is it's also historically one of the disqualifiers for the earned income tax credit was being married and filing separately. A married filing separate tax return rendered that taxpayer ineligible for the earned income tax credit. They could, if you were separated from your taxpayer, if you had a qualifying child and you didn't live with your spouse, you have the ability to file as head of household and you would be able to claim the earned income tax credit. But married filing separate was an automatic disqualifier. Going forward, there are, under certain limited situations, there will be times when a married but separated taxpayer will now be able to claim the earned income tax credit. They can't live with their spouse for the last 6 months of the year. They would have to have a separation agreement, and they have to have a qualifying child that they lived with for some time during the year for 6 months. They don't have to claim the child on their tax return, but they just simply have to have a qualifying child that they lived with for 6 months at some point during the year. It doesn't have to be the last 6 months. It can just be any time during the year. There's going to be a new question that you're going to have to deal with on the earned income tax credit. And that's going to be with this whenever you have a married filing separate return. And you're going to have a box that you'll be able to check off if they meet this credit. As you can see down here in the right corner of on the slide, that they're on the 2021 EIC questionnaire, that there is a box that they'll be able to check. And once they check that, then that will allow them to collect EITC if they're otherwise eligible. The next change, which I think is a pretty big change for 2021, is the age requirements. Historically, if you are a taxpayer and you do not have a qualifying child, you have to meet certain age requirements. You have to be at least age 25, and you have to be under age 65. This was designed so that, young folks with no children couldn't claim EITC, and older folks started going into retirement years with certain, maybe part-time jobs also would no longer be able to collect earned income tax credit. Well, this has changed. In 2021, if you're a younger person and you're single, the age requirements are if you're a taxpayer with no qualifying child, single or married, but if you're if you're a taxpayer with no qualifying child and your age is 24, and you're a student, that's the requirement. But if you're not a student, you can be 18 and claim earned income tax credit if at any time after you turn 14, you were either in foster care, or if any time in your life you've been homeless, then you'll be eligible for EITC at 18. If you're not a student, not homeless, or ever been in foster care, the age requirement's now 19. So younger folks will be able to collect earned income tax credit. Another big dramatic change is the age 65 requirements no longer exist. There is no upper age limit. You simply just older folks with earned income, older folks that maybe are retired and collecting doing some, part-time job, getting some earned income, are now going to be eligible for the earned income tax credit. Something else that has changed is the dollar amount that these folks, these single taxpayers, are going to be eligible to receive. Last year, the maximum benefit for a single taxpayer with no child was $538. This year, it's almost triple that amount. It's $1,502. And the income requirements are much higher. They've increased the income requirements to still get on them, get an earned income tax credit is $21,430, which has increased by almost $4,600 over last year. So again, more folks are going to be eligible to collect the earned income tax credit this year. Another wrinkle with the earned income tax credit is we can continue to use prior year income to calculate the earned income tax credit. And this is a result of the coronavirus pandemic. But a wrinkle on all of this is that you have to use your 2019 earned income. You cannot use, when you're calculating it based on prior year earned income, you cannot use the 2020 amount. That's not going to be relevant. We'll go back and we will look at the 2019 amount. Now there's a new line on the 1040, and we're actually going to have to enter it on the 1040. It's actually going to be on our forms where we will enter it in. Previously, whenever we use prior year income to calculate the earned income tax credit, it was something that was reported in the margins. So that's all I have on the earned income tax credit.